Hello and a very warm welcome to Policy Watch, our weekly program that seeks to keep you abreast of all the major macroeconomic developments of the week. As always, we've lined up three major stories for you: the slew of macroeconomic data that was released during the week, the International Energy Agency's latest World Energy Outlook that was released on Tuesday, and the latest reform agenda announced at the end of the third plenum of the 18th Party Congress of the Communist Party of China at Beijing. And joining me in these discussions to discuss the developments is Dr. Jaimini Bhagwati, formerly India's High Commissioner to the UK and presently the RBI Chair Professor at ICRIER, the think tank in New Delhi. Welcome to the show, Jaimini. Well, the week saw a slew of data releases. Trade data for October was released on Monday, followed on Tuesday by the Index of Industrial Production numbers for September and the CPI, the Consumer Price Index for October. WPI numbers, the Wholesale Price Index, came on Friday. The news was mixed. While trade data was definitely better and industrial production just a tad better, inflation numbers show no sign of let-up in price pressures. That is not good news in a country with close to a third of the population below the poverty line and is little short of disaster for a government heading to the polls. How should we read the data? Is the glass half full or is it half empty? We'll ask Jaimini, but before that, let's hear this bureau report.
After remaining flat in August, industrial production showed signs of recovery as output grew by 2% in September. The improvement was mainly on account of better performance by power and mining sectors. Power generation showed a healthy growth of 12.9%, while mining grew by 3.3% in September as against 2.2% in the same month last fiscal. The manufacturing sector, that makes up over 75% of the index, grew a meager 0.6% in September. Capital goods production, that indicates demand, declined 6.8% in the month as against a contraction of 13.3% last September. The consumer durable segment contracted 10.8% in September as against a decline of 1.5% in the same month last year. Growth in non-durable sector was 11.3% in the month under review.
Jaimini, among the data releases that we had this week, which would you find the most distressing and why?
Inflation obviously is the number which is most worrisome because inflation affects the most vulnerable very badly in terms of their purchasing power. But you know, when I was listening to the numbers and the report, the thought that came to my mind was that, you know, on any of these issues, you need to distinguish in your mind between the short term, medium term, and long term. And one needs to balance what is appears to be dominant in terms of the numbers that you just saw vis-a-vis the broader trend longer term. And there I would say that the fiscal balances, we need to be very careful on that, and obviously it has an impact on inflation. The internal and the external value of the rupee. What is the internal value of the rupee? Interest rates, and obviously not just short-term interest rates but also medium to long-term interest rates, and the external value of the rupee is the exchange rate. So these are the three parameters that I would watch closely because on all three have a bearing on inflation.
But one of the things that has really been very worrisome is that the wholesale price index, which had shown signs of moderating, has again reversed trend, and the CPI, which is the consumer price index, has touched double digit. So for a country which, as I said, has so many people who are poor, and for a government particularly, because nothing hurts the electorate as much as high prices, and we've seen vegetable prices in the range of 250, 300% increase. So why is it inflation proof so sticky, and can the government do anything at all about it?
Well, I won't be presumptuous enough to suggest that I know what is driving inflation in general and inflation in vegetable prices in particular. There are both supply and demand factors. So, and one can break it all up, but I don't think now is the time and place to try and get into the technical details of what is driving inflation. What is important is in terms of giving some relief to the average person is to identify those items which are of daily necessity and try and see how we can increase supply. There might be supply bottlenecks which might be possible to ease, but again, as I said, I don't want to be presumptuous to suggest that I have any solution for this. Down at the lower levels of administration, one needs to enthuse people to make supply better. And here, of course, you have the public distribution system. Some states it works better, and public distribution systems don't necessarily have all the daily necessities of people. Some have argued that public distribution systems are not the way to go, but put cash in the hands of people.
Yeah, the cash transfer system.
You have the Aadhaar program. So again, I don't know how much time we have to get into some of those issues, but a balancing between cash in the hands of people. What do I mean by balancing? What I mean is that in some states which have perhaps reached a sufficiently advanced level in terms of those who are enrolled in this unique identification number program and have the ability to be actually able to purchase what they require with the cash transfers, maybe in those states you could do that. But in some other states, and here I'll be very careful not to mention the names of the states because I don't want to suggest that one state is behind another, you may continue to need the PDS. So despite all that is said against the PDS, my own sense is that you need a not one size fits all, but you check what works best where.
So if inflation is what worries you the most, do you see any green shoots, as the finance minister talks about, either in the IIP numbers or the trade data, certainly which suggests that we may achieve the current account deficit and trade deficit will be much more manageable? Do you think that's a temporary thing, or is it something that is more sustainable?
See, there are underlying factors. The underlying factors as far as the current account and within it the trade account is concerned is our international competitiveness. And there we have a long way to go on the export front. On the import front, we have unfortunately become so dependent on foreign sources of petroleum. We are a net petroleum importer, and that's a huge drag on us. I won't get into the whole gold issue because that, I think, is driven by a variety of factors. And my own sense is longer term on the these are the areas: current account, trade deficit driven by lack of competitiveness, and the fiscal balances. We need to perhaps have more transparency on it in terms of something which is technical, which we can do. I would move, very frankly, our budget from a cash-based system to an accrual-based accounting system.
Absolutely, that would make a huge difference, but that might also increase the government's fiscal deficit much more, because currently they have the facility of rolling over. But coming to index of industrial production numbers, which were also released this week, is there any sign of some kind of recovery in industry? We've seen industrial growth now at 2%. It was less than expectations, but given that we've had negative growth for quite some time and there are faint signs of manufacturing perhaps doing not as badly as before, would you think that is a plus, or does the decline in the capital goods output still distress you?
No, I think there are signs that we may be bottoming out, and I hope that that's what the real situation is on the ground. But I would wait. I won't rush to declare victory, nor would I be getting into a gloom and doom kind of situation. But I would say that the glass is more than half full as far as I'm concerned. But there's also something to do with...
So very quickly, if I can ask you to stick your neck out, what do you think will the GDP estimate for the second quarter be? It's released at the end of the month.
I would hesitate. I'm not going to fall into that trap of giving a number.
Okay, on that note, we'll slip into a very short break, but please stay with us. We'll be back very soon. Welcome back. According to the International Energy Agency (IEA), the global energy scenario is set to change dramatically. In its latest World Energy Outlook released on Tuesday, the IEA says China and India will increasingly drive world energy demand. even as the United States' remarkable success with extracting oil from shale formation puts it on track to become the world's largest producer of oil and independent of the global market. While this has huge implications for geopolitics, what does it really mean for India's energy security? Does it make the oil sector deregulation more or less of an imperative? We'll get Jaimini's view on this, but first let's hear our bureau report.
From being the world's biggest consumer, the United States was all set to make the leap to becoming the largest producer by 2015. According to the International Energy Agency, the US will not only overtake Russia in oil production by 2015, but also be close to energy sufficiency in the next 2 decades. On the other hand, India and China will drive the world energy demand. China is already close to being the largest oil importer, while India could be a leading coal importer and displace China in energy demand after 2020. The Paris-based agency expects global oil demand to cross 100 million barrels a day by 2035. That's an increase of 14 million barrels. Global production of crude could come down to 65 million barrels a day by then. New producers like Brazil and Canada will step in, exploiting new fuel sources like shale oil and light, tight oil or LTO. The OPEC countries of Saudi Arabia, Iran, Iraq, Libya, Kuwait, Qatar, Ecuador and Venezuela will however remain the source for low-cost crude supplies. Canada and Brazil could also reduce the OPEC's clout temporarily in the world oil market. The agency projects crude prices will rise to $128 a barrel by 2035. Asia and the Middle East could expand refining capacity, while reduced demand in the West would pressure some refineries to close down. A Bloomberg survey of over 700 sites suggests that European refineries are most vulnerable. By 2035, refining capacity of 10 million barrels a day could face closure. Brazil would triple output to 6 million barrels a day by exploiting deepwater reserves and become the 6th largest oil producer by 2035. North American shale gas liquids will dominate output growth over the next 10 years. But OPEC, that supplies 40% of the world oil, will regain prominence after that as supplies from outside OPEC will fall. Far-reaching changes that are expected to completely transform the global economic and strategic landscape. Bureau Report, Rajya Sabha TV.
Jaimini, what does it really mean for us? Does it change things dramatically? That is my first question. The second question is, what are the chances that we'll be able to replicate the US success in shale oil? After all, we are supposed to be having substantial reserves. So what do you think the chances will be that we too can one day become zero import dependent on for oil at least?
Maybe it's a personal failing, but I tend to look at things over the medium to long term. And I remember reading something maybe yesterday from the Economist Intelligence Unit expressing some doubt about the sustainability of the amount of oil and gas which the US would be able to extract through this process called fracking. Now, I don't know the veracity of the EIU's report, but fracking has environmental issues that surround it in terms of a lot of people have concerns about that. I think the technology is still being perfected. It is going to, irrespective of how much oil and gas the US can extract, and other countries for that matter, I believe Canada has huge reserves too. If, and there's a big if the total availability, total global production of oil and gas goes up, it's good for a country like India because we are net importers of oil and gas. But having said that, in the medium to long term, we have to reduce our dependence on imported oil. I just can't believe that in this large territory called India, we don't have more oil and gas. I come from Assam, and Assam, as you know, Digboy, that's where the first oil well was sunk. So my sense is that while we continue on this path in which some of our oil majors, particularly the public sector ones, which go and purchase oil fields or take an equity stake in a gas production, we need to complement that domestically with doing more to find more oil and gas. And also, obviously, I don't want to get into the controversial thing about gas prices in India and from
very controversial, absolutely. Yeah.
KG Basin and so on. But the prices must reflect cost of production plus some reasonable profit for the producer.
But is part of the success for any kind of oil exploration also linked with the end price that you get? Because even regardless of whether we're talking about gas, for which national pricing has become particularly controversial at the moment, but given the fact that we have, administered prices for oil, diesel, LPG, etc., it's going to be very difficult for any company which is going to get into the exploration and production business, because after all, you have to look at the end product, what are you going to sell it to, which is why private producers have just not been interested. So is it in any way linked to what we must do to deregulate oil prices?
I couldn't agree more. We need to deregulate not just oil but energy prices, and that includes electricity produced from any other source, whether it is conventional fossil fuels like oil and coal, or whether it is coal. We have abundance of coal, but you know the situation in coal right now. But the other sources of electricity, whether it's hydro, whether it's nuclear, we need to have rational pricing policies. If we need to subsidize some user, and we talked a little while back about cash transfers, we find a way of subsidizing them which does not interfere with the market processes, by which I mean that the prices are compatible with continuing investments, both to explore in the case of oil production, or distribute, because we have, as you know, separated out production from distribution, make it rational. But without that, so many of our state electricity boards have such huge losses, debt overhangs. Not just continuing losses, that's the flow, but they have stocks of debt which they are not in a position to service. So I couldn't agree more with you. I've kind of broadened your question, not just from the prices of petrol at the oil, at the petrol pump, which I think we are on the right path. We are gradually trying to align those prices to market prices, and I think we should continue on that process. But very frankly, I would not subsidize even gas for domestic use. I would find some other way to provide that subsidy. I will hasten to add that we must subsidize those who are vulnerable, but the way we have chosen to do it in the past has interfered with the market process, leading to potential investors becoming very wary of investing in the energy sectors. It's completely
distorted, I think, market signals. But one of the pluses, if you look at the IIP numbers, is that electricity production seems to have improved considerably. So I think in the electricity front, the power sector, we have done a number of reforms which perhaps are bearing fruit. Maybe we need to do this in all other sectors as well. Coal, it is tragic that India should be become the largest importer of coal when we have such abundant reserves. Yes, so and that I entirely agree with you. But talking about fracking, there's been a lot of environmental concerns. Now, do you think environment is a luxury that a country like India, which is so poor, should put environmental concerns on the back burner? Because after all, you first need to provide energy and then look at environment, or can these two things go hand in hand?
When you talked about environment, and can a poor country like India forget about the environment? Absolutely not. All in capitals, the N in font 24. The reason I say that, I just come back from Assam, and when I look around, earlier I'd gone to Kashmir, two very different states, but I was pained to see some unrestricted kind of construction. By here I mean civil construction, not about roads. Roads are needed on hillsides, and I get a sense that perhaps they are paying
too high a price maybe. But on that note, Jaimini, I'll have to interrupt you because we slip into a very short break, but please stay with us. We'll be back very soon. Welcome back. It is China's 13-year head start in the reform process that has helped China grow at a breathtaking pace and overtake Japan to become the second largest economy in the world by 2011. Or so we in India would like to believe. But today China, like India, seems to have reaped the benefits of all the low-hanging fruit. The growth is still strong. It is no longer in double digits. This week, President Xi Jinping was expected to announce new reform initiatives at the Communist Party meet in Beijing. But contrary to expectations, initial statements suggest the party has opted to go slow. Does this give India a chance to catch up? Let's hear what Jaimini has to say on this. But first, our Bureau Report.
The annual meeting of the ruling Communist Party of China disappointed many Western observers who were looking for big-ticket internal reforms on the lines of the 1978 plenum. New President Xi Jinping promised more property rights to farmers to allow them equal participation in modernization, a critical attempt to rebalance growth that's highly skewed towards big cities and investment. Party leaders pledged to expand free trade zones, deregulate investment. They also promised fiscal reforms and a more independent judiciary. But more worrying was the silence on state-owned companies. Even as they promised a decisive role for the market, the party reiterated that the public sector will be an important pillar of the economy. Many feel Xi and his team are ignoring the side effects of their economic model, especially problems of excess capacity and lack of support for entrepreneurship. National debt has risen to unprecedented levels. Credit rating agency Fitch estimates that total credit will surge to 216% of the GDP this year from 129% in 2008. As China's costs rise, the economy needs a major upgrade to compete with the US and other rich economies. It requires more professional bankers and corporate executives, greater innovation, more rational prices, and a level playing field for private and foreign companies, none of which can happen without a dramatic withdrawal of the state from the economy. But Xi has left observers guessing as to how he plans to deal with these issues. Bureau Report, Rajya Sabha TV.
Jaimini, what is your take? You've been a diplomat, and if I can just quote what Reuters had to say in its breaking news copy, it says, the communique has phrases like comprehensively deepening reforms. Now, does that sound very much like what we in India like to say, no details, but just these platitudes? Or does the Communist Party always, just say one thing but act, whereas we in India like to talk and not act as well?
I think that's a good point. I won't put down our country because I am always a little uncomfortable in these inter-country comparisons. There are so many other factors, and without making,
including the political system, which makes
absolutely. I don't want to make a case for Indian exceptionalism, but even the most, should we say, biased observer of India will say that the conditions and where we come from are so different. It becomes difficult to compare. Let's take apples and oranges separately. And since I like oranges more, so India is orange.
Orange, okay. But not saffron.
Not saffron, maybe, I don't know. I don't want to go there. That's. But come back to apples, which is China, is that they do three things very well. And they are the following. They implement very well, number one.
Absolutely.
They first design something and implement very well. Number two, they implement very well. And number three, they implement in a cost-efficient and
and all three
manner.
of which we don't.
Sometimes we don't, and sometimes we do. Unfortunately, our implementation gets stuck because some of our people get confused between the short, medium, and long term. I come back to that theme because you are upsetting somebody's short-term interest. Sure. Even that person who's opposing you, he or she as the case may be, would be benefited in the longer term. But they want immediate redressal of some grievance, if it's an environmental issue. I don't need to go there about steel production or whatever, but because of environmental concerns, some foreign companies have chosen to opt out. Now, in the long term, in terms of creation of employment, in terms of development of that particular state or region, I'm sure they would be benefited, and the country would be benefited by more steel production. I just, by the way, this is just an arbitrary example, not. But in the short term, they are going to lose out. Maybe there are some social, cultural, religious issues, so we need to address them. That's why I find that we oranges need to find our own unique solutions, taking more and more people into confidence as to why something is in their own medium to long-term interest, in the interest of their children. I think that's what people respond to.
The intergenerational equity issues. So we need to tell them that today you may have suffer some pain, but this is a short-term pain for a long-term gain. Is that how you would like to put it?
Absolutely. The only thing is, for those who are at the margin, if you tell them that don't eat today, you can eat next week, and the person will say, look, I won't survive till next week. I'm making it sound dramatic, but what I'm saying is that you need to also
have
cater,
a balance.
you need to cater for those who are not in a position to wait. But there are others who are in a position to wait. So you need to explain to others. Now, for instance, some kinds of subsidies which the government provides somewhat more sort of, liberally, and then it benefits even the middle class. So I won't to stray from China and India, apples and oranges, to something very different. Higher education, I find sometimes I get a sense, I benefited from almost free higher education, and I feel, since I'm from the middle class, my parents were from the middle class, that they could afford to pay a little more. They were stretched, while someone perhaps from a weaker economic section or weaker social sector might not have been able to do. So we need to target our subsidies better.
Apparently, the three main sectors where China really needs to reform is the capital markets, land and labor markets. So I think there we have an edge, because we've done considerable reform in the capital markets, but land and labor have been particularly problematic. Do you still see these as sticking points in the India development story?
I won't necessarily say that we are ahead of China in terms of the capital markets, because when you look at the issues of their banks and so on, yes, their currency is not convertible on the capital account, but increasingly they are trying to make the renminbi more usable, particularly by their larger trading partners within the ASEAN group. So I won't dish them, I won't put them down on the capital markets front. And in fact, I think we have lots and lots more to do on capital markets. I suppose we have to do lots more everywhere. But I think we need to be careful.
Basically, we need to be careful in drawing comparisons, because they really are not comparable situations. But on that note, I think we come to the end of this program. Thank you so much, Jaimini, for being with us. It's been great having you. But before we close, here's a quick look at the key takeaways. As far as the macroeconomic data releases was concerned, what worries Jaimini most is inflation. Fair enough, because in a country which has so many poor people, food inflation and inflation overall is the most worrisome aspect. As far as India's energy security is concerned, as energy is very important, it's key to development, but we can't ignore environmental concerns. And as far as China's reform and India's reform is concerned, Jaimini very rightly pointed out that you can't compare apples and oranges, and we are very different. So we have to kind of walk our own path to development. With that, we come to the end of this program. It's been great having you, but please stay with us. We'll be back same time next week. Till then, it's goodbye from all of us in RSTV.